In this extremely difficult environment, as we saw today, you want to circle the wagons around the stocks of high-quality companies that have strong positive catalysts and that don't have much economic exposure in a weakening global economy. Take Charles River. It's Charles River Labs, CRL, the contract research organization that provides universities and biopharma businesses with everything they need to discover new drugs and conduct early-stage clinical trials, including the right kind of lab rats and mice needed for safety testing. I always tell you to think of Charles River as an arms dealer to the pharma and biotech industries, two groups with very little economic sensitivity. Regardless of the Fed or China, you know those are my two biggest worries, these companies will still be spending money to discover new breakthrough drugs. It's just not economically sensitive. And a decent chunk of that money is going to wind up at Charles River Labs. Plus, yesterday morning, the company announced that its acquiring competitor will research for $585 million in cash. It's a deal that was immediately applauded by the analyst community, with the news actually sending the stock higher, despite the gravitational pull of the averages yesterday. This acquisition expands their client base, boosts their scale, and allows the company to diversify into niche high-end service areas and like safety assessments that they really weren't big at. So can Charles River, one of our stalwarts, which was up more than 25% last year, continue to climb? Let's take a closer look at Jim Foster. He's the chairman and CEO of Charles River Laboratories, to hear more about this deal and where his company's headed. Mr. Foster, welcome back to Mad Money.
Nice to be here, Jim.
All right, James, one of the things that I thought was really interesting was that there were analysts who I thought were kind of like lukewarm about your company. And they just changed their mind immediately on this acquisition, which is very unusual. But I'm going to quote one from Wells Fargo. That they had felt the major factor keeping them on the sidelines is they felt that you were an animal model production company. Actually, I don't think that's really true, but that's what they said. How different does Will make your company that suddenly it's got people who haven't liked your stock changing their mind?
Well, it expands our capabilities dramatically. It's a company that we have admired and respected for years as a scientific peer of ours, gives us geographic reach, gives us new business activity, principally contract production of drugs, which will be a nice expansion to our portfolio. It also gives us expanded exposure in the agrochemical testing and industrial chemical testing, which is something that we do in a small way. So larger capability, some new activities, and expanded geographic reach, and great science.
You know, it's funny you mentioned the agriculture, because I read it, I said to myself, you know what, they're tough on GMOs over there. They're tough on things, on anything having to do with where you change the molecules. Are you able to capture what Europe is so fearful of, which is that we're doing things that are wrong in medicine and food and ag?
Well, Europe has been particularly sensitive to new chemical entities and their impact on the environment, impact on food, impact on leaching into the streams and rivers, for instance. And so, yeah, we've had a meaningfully sized business in that, and now have a much larger one. We also have greater geographic capability in a couple of countries on the continent in Europe to service strong, large pharma companies in Europe who I think will have great longevity, have great P&Ls, very good pipelines. So expanding in Europe is important for us, both on the classic safety assessment side, but also in the environmental testing side as well.
In the presentation that you made, there's a great quote where you just said, actually kind of astonishing, it said that many of the drugs that have been approved by the FDA in the last few years are currently working with their way through the pipelines are the products of large biopharma's collaboration with biotech. I would add that we are very proud of the fact that Charles River worked on 55% of the drugs that were approved in 2014. 55%?
Yeah, we're obviously extraordinarily proud of that statistic, Jim. I don't think there's another company in the world that could say that. Makes us very proud to get up every day and make a contribution like that. And yeah, we're working with all the major pharma companies and biotech companies throughout the world and helping them accelerate the development of the drugs and getting them to market. So it's a lofty goal that we've had and one that we've been able to achieve.
You know, in the last few months, they've shut out the biotech market, the IPO market for biotechs. Is that something we should be concerned about? There had been such a plethora right now at this time. Does Charles River have to worry that there's just been not a lot of liquidity of late for new biotech companies?
I don't think so at all. More money went into the biotech market in 2015 than any year before that. We think there's several years of money that they have available to invest in their current pipelines and new pipelines. More importantly, most of the innovation, or much of the innovation, is coming directly from biotech to pharma.
Right.
We showed yesterday that about 42% of all the drugs that pharma has are coming from biotech companies. So biotech companies have become the discovery engine for big pharma. And even if the capital markets were to slow down a little bit in terms of their availability to biotech companies, big pharma will continue to fund the biotech companies because they have to, because they really need to. And pharma companies have become less interested in who actually discovers the drug, as long as they can get access to a drug that meets their strategic needs. They're happy to get it from biotech companies. So we're actually not concerned about that.
Well, I want to congratulate you on the acquisition. When it was made, I said, oh, boy, this market's so negative. I hope people know how good it was. The market actually reacted correctly. That's Jim Foster, who's the chairman, president, and CEO of Charles River Labs. Thank you so much for coming on the show, sir.
Thanks, Jim. Always a pleasure.
We've liked this stock. Doesn't have a lot of competition. Makes it easier for biotech and pharma to develop new drugs. Non-economically sensitive. That's the kind of thing you got to be looking for in this market. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs. Plus, market news, investing advice, and a whole lot more.